live on our YouTube channel, and we'll do that same thing on our Facebook page as well to welcome these two individuals into the studio this morning from Metro Mortgage. It is Matt. Good morning to you, sir, and thanks for coming in this morning.
Thanks for having us, Chris.
Absolutely. And Josh is in here as well. Thank you for being here this morning.
Thanks for having us.
You guys, Josh, you're very active on your socials out there. A lot of education happening. I think I saw a good 30-minute segment just the other day about buying a home and in that education side of things, right? Mm-hmm. You guys are staying on top of it. Why would you want to drive people to your socials? What's happening these days so that you can get them into that buying mode there?
Yeah, the whole point of our social is obviously be entertaining and be top of mind whenever people are thinking of buying or selling a home and they need help financing. They reach out to us, so we try and make it fun for the things that we do.
Because it can be a little boring.
It can, and we try to avoid it, and it certainly can be. Mortgages can be boring in general, so we try to have a little fun with our Friday shenanigans, as we call it.
Absolutely. So. Well, looking forward to the next one. And for the listeners and viewers out there, definitely make sure you're liking Metro Mortgage and their socials for all of that. It's fun. It's good entertainment. You're doing it right, the way it should go.
Thank you.
Absolutely. Let's talk about the individual out there that is wanting to list their home. And I don't know necessarily all the steps of it, but there's kind of that movement from the commitment to really confident that they're going to sell it and for the price that they're looking for it. Matt, let's dive into this with you and let's talk a little bit about and we're talking about bridge loans as well this morning too, right?
Correct. Yeah, I would say that there's a couple of common challenges that or concerns that people may have when they're thinking about listing a home. One of which is, can I get an accepted offer if I would have to write an offer that's contingent upon my sale? Okay. Or if I'm writing an offer that's not contingent upon my sale, can I afford to mortgage payments, or most of my down payment on the purchase is coming from my sale? So how do I make all of that work and accomplish my objective of downsizing or upsizing or getting into a different school district? And so,
do you see that people make mistakes from time to time in regards to that if they're not knowledgeable enough, or they don't have they're not talking to the right people, I guess?
Well, I would say so. I think that a lot of people assume that the only way to do it is to write an offer that's contingent upon the sale of their existing house. And in this market, as you mentioned, it's extremely difficult to get an accepted offer if you're writing an offer that's contingent upon sale, because you've got 10 other offers that are not contingent upon sale, and so you're not maximizing your odds if you're approaching it from that perspective.
Do you discourage people from taking that approach then, or not?
I mean, if that's the only option, and there are situations where that is the case, then it's still a viable strategy. But we do have a new bridge loan product that allows them to solve all of those problems and be able to write an offer that's not contingent upon sale, and we can bridge their equity from their sale to their purchase, and actually we can even eliminate the need for an existing mortgage payment on the house that they're selling. So it's an interesting product that allows them to solve all of those impediments.
Do you see, Josh, that this day and age it can be kind of a clean slate? It took care of everything from the sale of the first home, and you're going into that next home, and you're not bringing a lot of baggage along with you. Is that happening this day and age?
Oh yeah, most definitely. Especially people that have owned their homes for the past 2 or 3 years. Equity on homes has increased quite a bit. So we have quite a few people that are selling their house, whether it's contingent or non-contingent, paying off all of their debt, doing a nice little down payment on the next house. So they're coming into the next house basically free of all that, like you said, all that baggage. So that certainly is common.
And it's more common than in the past, obviously, because we're selling our home for more in most cases, and we're getting what we're asking for in most cases. What about that individual that sells their home? They are buying another home that is less than what they receive, so they've got a little bit of a mound of cash there.
Yep.
Any recommendations? Do you say, hey, let's get that new home paid off as quickly as possible, or do you look at stretching that out for a while? What's the magic thing, advice there?
Yeah, I mean, I would say it depends on their situation, and obviously they need to get input from their financial advisor. But one thing that we have, one kind of question that's related to that is we've had somebody that maybe has a 20% down payment, but they've got equity that could effectively pay off the loan that they're purchasing once they sell. And so we are allowed to have a borrower recast a loan if we do a bridge loan for 20% and then they close on their sale 2 months later, and they want to take that loan balance down to 50% or 40% of the appraised value. Then that way they've got a much lower payment. Perhaps
Exactly.
they're on a fixed income. So we see that as a pretty common theme. So you can recast a loan and ultimately significantly reduce your payment once you sell your house.
And that's recasting versus refinancing.
Correct.
Yes.
Yeah. So there's really no cost or fee to recast a loan. It's like a one-time $250 fee. So it's a very easy thing to do. There's no appraisals or closing costs or things of that nature. So it's a great option for somebody who's going to have a big infusion of liquidity once they sell their house.
A good point there. Do you see that people are looking for, and maybe it's a combination of both, but where do people tend to lean when it comes to, is it the lower payment they're looking for? Or is it the term of the loan, if that makes sense a little bit? Because we see that we're churning houses constantly, right? It's like, I'm not going to live here for the next 20 years or 30 years. It might be, I'm looking for something in the next 10 years or less. Where are people landing these days when it comes to that?
I think it depends on stage of life. If you've got a younger family who has kids and they're saving for college and those sorts of things, then trying to minimize the housing payment is probably a common theme in that situation. Conversely, if you've got somebody that's through all of that and focused more on minimizing their interest expense and just kind of having their retirement and passive income sources to be able to meet all their needs, then kind of doing a 15-year or accelerating the payoff is more common. So I think it really depends on the household dynamics and what their objectives are.
All right, for sure. If you're just joining us, we're talking with the team from Metro Mortgage, and so bridge loan versus what, fill in the blank for me if you don't mind. So bridge loan versus other loans that people might consider or look at out there. Why are they going with the bridge loan?
I think maybe the best way to explain it is to talk about an example that came up for us last week in Manistee. We had a borrower that had reached out and say, hey, my dream house in the perfect location just came up, but I don't have time to list my house, and I can't afford both mortgage payments, but I need to have this house. Like, this is my house. So we looked at it and we said, well, the only way to accomplish that is to do a bridge loan where we effectively pay off your existing mortgage and have no payment associated with that. That way your debt to income ratios work. You've only got one mortgage, and we'll have to bridge your equity, through the bridge loan, on the down payment for the purchase. And so we were able to put all that together very quickly. She got an accepted offer. She now has her house, listed. We're going to close on her purchase in about 2 weeks, and then she'll close on her sale, somewhere in the next month or two. They're getting a good amount of activity, but that's the perfect scenario for a bridge loan because really and truly she could definitely only comfortable making one mortgage payment. Wanted this house, and this was the only way to make it happen because she was non-contingent and didn't have any other equity to go towards down payment other than us bridging it for her. So I think that situation is very common.
And we can tie those bridge loans in addition to our Same as Cash program as well.
Very true.
So you can bridge the 20% down on a conventional loan. We can do the Same as Cash pre-approval, effectively allowing you to write a cash offer with no contingencies. So we have done that in the past as well.
Is there any sort of negative to this at all? And I ask that because people hear this and that and so on and so forth, rumors out there. Just on the initial phase, you've got you're bringing a loan on. You want to try to pay that bridge loan off as quickly as possible,
right?
And that is, I would assume, tied in with the sale of your home. You can get that paid off as quickly as you can, right?
Yeah, I mean, I suppose the only negative is you just want to make sure that you've got a high confidence level that that you've got a marketable house,
There you
right?
go.
I mean, if you've got a house that's in need of significant repairs and it's going to take 6 months to to sell it, then you just want to make sure that you're factoring that into your plans. But I think as long as the house is marketable and in good condition, given the amount of buyers that are out there, in most cases you can close on that sale and have a very limited period where you're bridging from one to the other.
Do most people know about this that's out there, or are they? Because the idea that, okay, as you mentioned early on, I've got to try to sell my house so that I'm not paying for two homes at the same time. That I've had that conversation with multiple people out there. It's like, before we look, we got a list. Do many people know that this is available for them out there?
I mean, some of the concepts that we have, same as cash program, is newer. The bridge loans we've kind of developed over time. We like to think that we are somehow improving, the market with this knowledge of these programs.
Okay.
We're focusing a lot with realtor communications, explaining these scenarios, obviously doing things, with you, Chris, here at the radio station, doing things on our Facebook as well. So we're trying our darndest to make sure that the word and the information is out there for these programs.
Are the real estate agents embracing these kind of programs? Does it make sense for them to push this?
Yeah, I mean, I think it's one of those things where once you experience and once you see how it can help a buyer, I mean, then the light bulb definitely goes on because you've experienced it, and then you can communicate that in every other future situation that comes up. So, I mean, as Josh mentioned, we're trying to get out there and have as many conversations with as many people as possible and get the word out. But ultimately, the best way to get the word out is to have success stories.
Absolutely.
So maybe we'll do that on one of the next segments. Is we'll have the bridge loan client come in and talk about how we were able to make it work.
Very, very good. Before we wrap up this morning, I always like to ask this question. What are the questions that people should be asking when they call Metro Mortgage and say, hey, I'm thinking about this? You'd hinted on a couple. The one that really stands out that you mentioned just a few moments ago was, do you think you can sell your home without having to sit on it and repair and do all this renovation? Is there anything else that people should be asking you when they call or sit down?
I mean, not particularly. I would say just to do that, just to call and have the conversation, because a lot of times there's anxiety as you're thinking about potentially selling and buying and we just want to help in whatever way we can. So if somebody decides like, hey, we may tell them, hey, it's probably best for you not to sell, based on what you're telling us, or we think it would be better for you to sit tight for a couple of years. I mean, we'll be honest and give advice like we were giving it to our family members, and just trying to be a resource in the marketplace and just do the right thing. And if we do that over time, we'll be able to help hopefully as many people as we can.
All right, we're talking with Matt and Josh here this morning from Metro Mortgage. Do we throw out percentages or rates or anything like that? Do these fluctuate just as much as the market?
You mean on the bridge loans?
Yeah.
I mean, we can do those a couple of different ways. I mean, the market rates on a bridge loan generally will just be similar to a 30-year fixed rate, so around 7%. Okay. As I mentioned, we have we can structure bridge loans a different way where there's actually is no interest and no payment, because we need to eliminate that payment for debt to income ratio. So in that scenario, it would be more of like a fixed fee situation, depending on how long the bridge loan was anticipated to be outstanding. But I would say in general, since they're outstanding for a short period of time, the cost of a bridge loan is very minimal. A, because they're consistent with market rates, and B, because they're outstanding for a month or two generally.
Okay, all right, that makes sense. Josh, did we miss talking about anything this morning that we want to make sure that we bring up?
Yeah, I'd like to make one last kind of comment. People are probably wondering, why are Josh and Matt talking about listing their house? What we're trying to do is provide confidence and encouragement for people that own and may be on the fence of listing, because truthfully, I think I just looked at it yesterday, we have over 70 pre-qualified buyers in the mom area. So wow. Mason, Oceana, Manistee. So I'm really trying to encourage people to encourage people to talk to realtors. There's a lot of fantastic realtors in the area. Talk to them if you're on the fence about listing, because we have the buyers.
Okay, good info. That's what I want to hear. People are ready to gobble up those homes. and not again. There's some haggling that happens, negotiating, so on and so forth. But in general, people are purchasing these homes for more than what they would have normally 5 years ago, 10 years ago.
That's right. Yeah, I mean, there's just such a limited amount of inventory, and unfortunately, new construction has not kept up with household formation for basically 2 decades now, and so nothing's going to solve the inventory challenge. It's going to continue to be a tight market, so we need to come up with creative solutions to help people get into homes.
Very good. All right, Josh, how do people get a hold of you to start this process to talk about the bridge loans and go from there?
Yeah, they can call us 231-425-5555, or they can stop into one of our 3 offices, Manistee, Ludington, and Hart.
All right, sounds good. Thanks, guys, for being here today.
Thank you.
Thanks, Chris.
Absolutely. It is 8:44 now on 102.7.